So we're going to talk about the different types of support and resistance. We've already gone through and built out support and resistance with leveraging market segmentation as kind of our baseline to identify. But that's not always how you'll find yourselves going into this identification phase. You'll not often have the time, and things don't change, especially on a higher time frame, as much as would warrant using segmentation. So especially when you get to the lower time frames, and I'm going to use the daily just as an illustration, but especially as you get to the lower time frames, you're going to be plotting support and resistance differently than segmenting everything out all the time. So there's two real main support and resistance types. There's change control zones, and there's true support and resistance. Now, support and resistance gets exact, right? I'll identify what was my thought process behind this piece of support and resistance. We initially see this area with one very identifiable move, and that is a quick test of this area and then an aggressive move out of it. So when you're thinking support and resistance, you're looking for a singular point in time in the overall context of the market. And we'll slide over a little bit just so that that secondary piece isn't there. Let's say that this had recently happened. Let's get rid of some of this stuff, right? So looking here, we can see that price came to this area and then very aggressively moved out of it. Now, similarly, if we look to other pieces in the chart and other areas in the chart, you're looking for one particular area that has induced sudden and aggressive movement out towards the other direction. So it's a come test it and then push out of it. This is a great example because we've got a few areas, right? So with this, especially when it comes to wicks on the higher time frames, if there's others around it that are relatively close and it will cross near the bottom or the top of a wick in the opposite direction, then I'll leverage the wick end of the other ones. For example, we've got 3 opportunities to capitalize on this area right here, but there's not enough to warrant building out a zone, which we'll get to in a minute. But if we look at what's possible, we can mark this off, right? Use this wick as our indicator, but if that's the case, then we miss out on this one and we're not really adding any benefit to this one instead of choosing here. If we leverage this one, then we're missing out on both of these. So the one that I would choose in plotting this support and resistance area out is this wick right here, because that means we captured this one, and they're close enough that that doesn't make a large difference. Okay, so again, if we zoom out and then scroll over, we can similarly look towards this area. Now, this is another really good example of looking at support and resistance. Price comes down, makes an aggressive move out here, and then comes back down and makes an aggressive move out here, then again here. So how would I go about identifying these areas? Well, if you look at how closely these wicks are tied together right here, sure, I could build out a zone right there, but I could do just as much by identifying this one particular point that seems to have really held a few times and captures most of, if not all of, the movement around it. Now, this could work in what I discussed earlier, where you're looking at movement around it and we're identifying wicks in the near vicinity that could impact this particular area. So, for instance, if I were to plot this out using this wick, it would not be out of the question to look at this and say, okay, yes, that works. Now, with that said, we're missing this movement right here, as well as, if you recall, earlier what I had mentioned was if we're near the end of the surrounding wicks near us. Well, we're not. We're actually right up at the body of the candle instead of near the end of the wicks. So if I look at this surrounding area, one thing that I can do is adjust this, and we're pretty much smack dab in the middle of this wick. We're getting a bit higher than I'd want, but if you look right, we're capturing this area. And this is spread out enough when you get to the 4 hour and the hourly that this is not super close together. I mean, this is 43.19, 42.71. So we're, 40, 50, 60 points away. So this isn't, right next to one another. So I would very comfortably have these two wicks identified. And so what does this give me? What does this give me in general when I'm starting to look at charts as a whole? Well, we've now got a few areas right here that are indicating a pretty substantial movement out of those zones and out of those areas. Can any of these be turned into a zone? If we look at and try and identify what really indicates a change control zone versus support and resistance, support and resistance is best utilized when you have very decisive and aggressive moves out of that area and it's not constantly broken with traffic going through it, right? So what I mean by that is that to me doesn't look like great support and resistance. Why? Because there's likely a lot of noise in this area that's causing that. Whereas if I look at something like what's happening, since this is, and one key point, you always look at the movement through it since it was established, right? We established this piece of support and resistance here. We're reading the chart left to right. All of this noise right here that kind of populates through that level doesn't matter. What would really be looking for in terms of building out zones versus support and resistance if anywhere in between here we're just slashing through that area. So another example being, if we look at, I went the wrong direction. What I intended to do was go this way. So if we're looking at this area, which is the other one that we had talked about, and we had come down here and tested this area, bounced out of it, made really solid headway out of it, continued to stay above it, and then we come back again and we test it. This to me still doesn't read as a zone. It instead still reads as support and resistance, because in the intermediate time frame and immediately after it, we had again respected it and moved out of it very decisively. Now that we start to get to this point where we're breaking through it, retesting it, starting to move through it with some traffic and some volume, and again, you see here, we're starting to test this area. Now it becomes a good candidate for a zone instead of just a true definitive piece of support and resistance. If we zoom out, you'll see that this currently is still not a zone. This is still just a true piece of support and resistance. This and this are both solid candidates for zones because since its instantiation here, right, we come down, move out of it aggressively, come down, move out of it aggressively, but now we break it. And so once we get to this area right here, this now becomes a good candidate for a zone because we come back up and we start to move out of it. We come back up and we start to move out of it. We come back above it, then we break below it, we come back to it and move out of it. Again, to it and move out of it. So instead of just looking at this as a singular point, what we should then transition to is looking at this in terms of being a much more open and volatile area that could decide the direction of the market for the foreseeable future beyond it. Now, it's okay to leave these areas of very intense movement and previously very decisive points marked off. So what I'll do is I'll edit this to be a solid line, and let's change this over to a different color just so that we can then work with it. So what do I do now? Now I take a look at this picture as a whole, right? So if I zoom in to everywhere that this has been relevant, I don't want just this particular point. I want something that I'm looking at determining market movement above and below. And what I mean by that is if I grab my rectangle tool, I can start to, just like segments, plot out zones that really dictate the overall market scope. I look at this and I would say it's okay to have movement that fills the zone. It's in fact better to have movement that fills the zone, as well as very precise touches above and below that are near the top side of that movement. Because when you think about change control, what a change control zone is really an area where you can expect the fight for control to be very aggressive. So if price is coming towards this area, you can expect one of two things at first. You can expect strong movement out of it, or you can expect very quick, very rapid movement within it until control is decided. Right? Think about this as in a football analogy as the line of scrimmage. There's a lot of movement that happens in here, and your quarterback's on one side, your defense is on the other. So you try and break through this, and that's going to determine if your quarterback's scrambling back or if your running back is pushing forward. This is a really solid area that there's a lot happening. You can see how quickly, once we're in here, we fill these levels and fill to the upside and the downside. And so let's say that we do get in here. There's no control right now. In here, control is undecided. There's still that battle at the goal line. But once we break out of it, in whichever direction, well, then that gives you opportunity to look for a retest of the zone. So if we were to break up and we come back and retest this zone, well, then I would be very encouraged to enter long here and try and capture a very aggressive move to the upside because control has been won by the bulls. Whereas if we stay in this area and we keep battling and and the bears try and beat it back down out of this zone, then similarly, as we come back and test this area, I would be very encouraged to take a short and try and capitalize on the movement here. Now, what this allows you to do when we're outside of these zones is approach it with very tight stops. So if, for instance, we're coming at it here and we know we've got a point right in the middle, maybe we don't want to enter on first test, but let's say we come down, test this level that's right in the middle, and then we break out of this zone. Well, let's put our stop loss maybe we want our entry attempts to be right at 41.38. So where does that put our stop loss? I mean, on the higher time frame, we're probably looking at 10 points below, so 41.28. Now that just misses taking our stop out, so maybe we look at 20 points if we're going to position trade. But regardless, you now have leverage where you're not entering super aggressively here, because you've got a really solid opportunity to protect yourself here. So as we come back into this zone, we know that we can either take an entry right here at 41.84 with maybe like a 2-point stop loss, because if we test this and it's going to hold, then it's going to hold hard and fast, and it's going to take off, and we very minimally risk. And then if that doesn't work, then we've got some wiggle room for protection inside of it. But if we're outside of this zone, then I'm always very open and willing to look at taking aggressive entries as we come up against it, especially if the zone is tight, right? Especially if we look at something much smaller and enter there. For instance, let's take a look at, here's a really solid piece of support and resistance that then became broken. So let's see if we can't find a zone around this that is very helpful in making determinations and deciding whether or not we would like to enter. So again, we'll read left to right, see if we can't find a low. And then as we pull up, see if we can't find a high. So this, although not much smaller, is a bit smaller. And so let's say we're trading down below it here. You can see we break out, come back, retest, and then roll out of it. We start to head back towards it. And so I would look for an entry at 44.93 short pretty aggressively. And again, we'll get to this. We aren't there yet, but let's just, for instance, say we add on some additional confirmation. I would look to enter maybe at 45.01 at our Fibonacci retracement, and then protect myself 5 points behind that. So well up into this zone. And from there, take a short. We have targets to the downside with those other support and resistance levels. But this video is really intended to be an introduction to the differentiation between zones and really solid pieces of support and resistance that have not been muddied yet with transactions that cause price to flow through and break that level. So what I'd encourage you to do is to open up a chart, and on whatever time frame that you like, start, or multiple time frames, even multiple charts, start to take a peek through and see if you can't identify levels of support and resistance that are working well or have the potential to work well, and then turning those into those that have failed or that have stopped working as well, but provide opportunities like this. Plot out some zones, and then ask questions about whether or not those look accurate, if there's anything different that we could, ways that we could approach it. But that's what I'd encourage you to do, to just start getting some visualization of plotting out support and resistance and change control zones truly as standalone pieces of information on your chart.